because I intuitively feel that there's something here to discuss that could be of real value to our overall effort to make the world a better place to live in. So that includes moving into new structures relating to exchange of value and our access to our own value and how we contract with each other. So how's that for an introduction, Henry? Could you please do me a favor and introduce yourself? Give us an overview of what you'd like to share as an introduction.
Yeah, well, I'm probably older than some of the other people on this conference call we have right now. I'm sort of semi-retired now. I have had a career in banking. I worked for one of the largest banks, actually two of the largest banks in the world, in various positions globally, sometimes in the U.S., sometimes in London and in the Far East. My specific expertise was not in taking deposits, but in several other areas, including derivatives. And as a result of that and my formal training in banking, I do have a pretty good overview and understanding of how the banking business works, both from a legal and also from a practical standpoint. And I've written a little paper after my conversation with Mark this morning, and I'm going to summarize some of the points that are in that paper, but I would like to encourage people to read it.
Yeah, I'll post it. So I'll post it on hoza.me, hoza.me as in Mother Echo, and I'll post it on there so that it's with this recording. People can read that, and then if we have some follow-on documents, I'll add that to that same post, so it's all together, Henry.
Good. Well, first of all, thanks for having me on the call, and it's nice to meet some new people and be involved. At least at this point in time, and maybe in the future, a little bit in this project. I do think there's some very interesting things going on here, and I think that it's probably a very good time in the world to be looking at new ways of doing banking and new forms of currency, because the existing system we have is under threat from a number of different angles, not the least of which as a result of the Fed printing too much money and putting the U.S. in a position where its currency is highly vulnerable in the future. So, I'd like to be part of the solution rather than part of the, ongoing problem. And I think this new, fresh idea that's come out of Heather and OPT One People is pretty interesting, and one that in my point of view, needs some support. I am concerned that despite all the positive feelings and good vibes and so forth that are going on around OP, that's One People, that the current effort is headed, as I put it, towards a brick wall. I don't think the banks are going to come forward and deliver on the monies that are being asked for. I would like to explain why, because I think it's important to know that. And that'll probably be most of what I have to say. And then towards the end, the last third or so, I can talk a little bit about, how a different approach might be formulated. I don't have all the answers, but I've got a few ideas in that direction. So this is not just a, constructive criticism. It's more than that. I'd like to suggest a way to move forward. But I do think it's important to understand some of the reasons why someone like myself with a lot of experience in banking believes that this effort is not going to succeed. Before I explain them, I would like to say that it's possible I'm wrong. I don't know everything.
Well, yeah, Henry, I would like to just maybe clarify that when you say this effort, you actually, from my understanding, you're discussing you're referring to the current effort to take deposits of value or declarations of value into banks and
yes.
Engage with banks to fund or to contract with people in order to access value. Now, I want to say that I've really been hassling Heather on this one and saying, what do you see as workable there? And she has repeatedly asked me, why do you want to engage, why do you want to go with the banks when, how has that worked for you so far? Why do you need that? And I have a lot of thoughts on that, but I just want to say that right now because maybe you're not aware of that as well. We're all trying to figure
Mark,
out
I think
something.
That's a very good clarification because, as you and I discussed this morning, I think it's possible that people haven't been listening to Heather quite as carefully as they should be.
Right.
That there are some parts of her ideas that seem to have been hijacked a little bit and taken in one direction that she may not entirely agree with. I really don't know. I guess what you're telling me is that...
it's like, she's not going like, do this, don't do that. She just keeps saying, follow your inner tools of guidance. Really, use your own discretion is another way of saying it. Like look at what it is that feels in the right direction. For me, it's a lot about really engaging with something and then seeing what resonates with me. And I don't know, we talked about this as being like kind of new terms, but resonance to me is really very technical. It's if you resonate, it amplifies the overall. It starts feeling more and more like game on sort of feeling, and it develops trust. You talked about trust and building trust. Anyway, I don't mean to interrupt. I just don't want to start out the call with people having like this bristling thing that happened in the chat rooms earlier today and yesterday, which was like, oh, you're an agent. You sound like an agent if you don't stop acting. If you don't stop being an agent guy, then you're gonna get kicked out, or it's time for you to just be loving and support this effort. And I felt like everything we talked about today, Henry, was very positive and moving towards. I don't think that this strategy would work, and this is why. But what about this?
Yeah, well, that's my overall story here is that, I don't want to be too negative and focus on too much on why the thing will work. It may work, as I said. It's possible. I don't think so, but it's possible I could be wrong. And if I am wrong, I'm not going to feel bad about that. I'm going to feel, very pleased for the approach that works, even if it's different from the one I'm suggesting. So, I'm very open-minded, and there are things out there in the world I may not understand, but I really do think I have the background and understanding of the banking world, and there are a few basic problems here that are worth talking a little bit about, and then I won't spend a lot of time on that since they're in the paper, but then we can move on after that and talk about where we might go and why we might go in a slightly different direction. So just very basically, please read the paper. Somebody's just returned to.
It's okay.
The main thing here is the COE or DOV is not a negotiable instrument. So this is a big problem for the bankers because if you give them a DOV or COV.
So a lot of people wouldn't know what those terms mean. So
sorry. Okay, I assume. Yeah. So please explain. Maybe you can define better than I.
Well, no, I think my understanding is, I was hoping you would, but my understanding is declaration of value, correct? And
anyway, declaration of value or certificate of value.
Certificate of value. Okay,
I'm using them a little bit interchangeably, but basically, what that is a statement that a certain amount of money, the person who makes that statement is asking the bank to convert it into dollars. And the bank is going to have a big problem with that because the same way you, the holder of the instrument, creator of that instrument, cannot create it into the value, dollar value, the bank will have a problem as well. There's no magical way they can take that along to the Federal Reserve or anyone else and get dollars out of it. And I think it's worth pointing out here that even, Heather talks about how the exchange of value, energetic value, represents something other than U.S. dollars. So to state on a piece of paper that you're owed a certain amount or you have access to a certain amount of dollars does not make that so, and does not make it possible for the banker to convert that piece of paper into the dollars you're asking him to give you. So I think it's important for people to understand that. On top of that, I think there are two important issues also explained in the paper that people need to understand when looking at this. One is the numbers that are being thrown around are really way, way too large. That, and again, I define this a bit in my paper. Talking about $5 or $10 billion per person on the planet. Well, there isn't that much wealth on the planet. I don't know where that number actually came from, but I think Heather or somebody might have taken some figures in the press about the number of derivatives, the amount of derivatives exposure in the world, and divided by 7 billion for the people on the planet to arrive at that big number. But if you do it more carefully and you look at the actual assets on the planet, if you add up companies quoted on the stock market, private companies, real estate, gold, bank deposits, all these sort of assets that exist on the planet, if you add all that up, you're going to come up with a number of somewhere between 3 and 400 trillion. If you then divide that number by the 7 billion people on the planet, you're going to arrive at a figure which is under 60,000 US dollars per person. So if my figure is right about how much wealth exists on the planet, and I have a reason to believe it is, then your share, any individual share of the total wealth on the planet that you might possibly own if it was divided up equally across the planet would be less than $100,000. So people saying that they're entitled to 5 or 10 billion or even 5 or 10 million is really completely crazy. And I think it was a big error on someone's part to push out a number as big as that. The problem with it is that when the bankers see that big number, they know, as I do, something about the wealth on the planet. And that big number is going to make them think that the whole idea is not serious, that some kind of scam might be involved. So I recommend people being a lot more careful about that number and trying to justify it in some way, as I have done a little bit in the paper. I think you need to work out what that number is and how you arrive at it, not just throw it around. The second sort of big issue that I have with the current approaches I'm hearing are the whole notion of the way that money is created. As Mark and I discussed this morning, what you're hearing on the podcast is half the story. It is true that banks loan money into existence, that money is created when a bank lends money. But that's not the end of the story, and you have to really understand the whole story if you understand the dilemma that the banks have when you ask them for your value. Here's what happens, and I hope, by the way, I hope I'm not going on too much here. Maybe I'll just ask Mark if I should go through my little $100 example here or not.
Yeah, you really should, because this is, I think this is really on point, and it would be really good if, again, I just say that I'm really looking at what you're saying and hearing it, and I like it that you're willing to back up what you say with facts. And then I also feel quite deeply that you're willing to be corrected if there's more information that you can be given that rounds out or expands your awareness of something that you haven't seen before. Then you seem to be one who would be willing to look at it and accept it and adopt it, and that you would then take that on board. And that's all I think that really I can, that excites me because you have a degree of expertise and experience. I want to bring that to the table, and then let's look at, what does that mean for us?
Okay, well, absolutely. If somebody can, rather than just attacking what I'm saying because it's different from what you've heard before,
Right.
If you take my points on board as I'm taking other people's points on board, and then elucidate and expand, we can develop, all of us, a better understanding of how this really works. But let me explain my understanding of. I worked in banking, and I did work for the president of a small bank when I was still in university, and then I worked for two very large global banks afterwards. And I got involved in looking at deposits a little bit for a paper I wrote for the president of the bank when I was still in university. And so part of my knowledge goes back quite a long way, but I don't think the world's changed really since then. So let me explain a little bit about how I see money creation working. And I'll give an example here. If I have a bank and Mark comes in and asks me for a $100 loan, then initially what happens, if we look at it in the simplest way, is I'll ask Mark to sign a loan agreement, and I'll lend him $100. And instead of handing him that $100, I'll put that $100 into his bank account. Now, at that precise moment, I have a very nice transaction because I've just created $100 of new credit, of new money, and I haven't actually had to go and fund that because the money I've given him, I've immediately put into his bank account. So I have on my balance sheet, within my control and ownership, I have the loan that Mark owes me, and I also have the deposit of the $100 that he has not yet taken out of my bank. So money's been created, but for me, the bank, it hasn't actually required me to do any new funding yet. Now I need to add to this the concept of fractional banking, because the way fractional banking works is that if somebody new came into my bank and it wasn't Mark, and they gave me another $100, a second $100, I could then take that money and lend it out to somebody else, and so forth. But fractional banking applies because I can't lend out 100% of that money. I have to actually give part of that money, generally it's 10%, to the Federal Reserve as a deposit. So when the Federal Reserve comes along and audits my books and looks at how many deposits I have, they'll make some adjustments for capital and so forth. But after those adjustments, for every for every $100 of deposits, I'll have to have roughly $10 on deposit with the Federal Reserve. So now let's go back to my banking example, the $100. If I lend Mark $100 and he immediately puts it into his bank account, I now have a new deposit. If I have excess reserves with the Federal Reserve, if I have more money on deposit than I need there, I won't need to do anything. I can rely on my excess reserves. But if I'm right at the limit, then when I make Mark that $100 loan, I now have a new deposit for $100. I will have to back up that $100 deposit with 10% of it, i.e. $10 extra, $10 more in my reserves at the Federal Reserve. So I'll have to find $10 somewhere, and that will mean either I have to sell an investment I have, it could be a bond or something, or I have to go out and raise new capital by selling some of my shares to get that $10 and hand to the Federal Reserve. Okay? So far, so good. I think you're probably with me now?
Yeah.
Okay. Now, the next thing is, the story isn't over yet. And this is, usually the story when told on the podcast doesn't even get this far. But the next part of the story is really important, and people seem to be forgetting it, leaving it out. But when Mark now wants to take his money out of the bank, begins to be a problem. If I've lent Mark $100 and he's got that $100 in his bank and he now wants to take it across the street and buy a mobile phone, well, if I haven't got that money in my bank, if I don't have extra cash, then I have a problem. When he takes the money out, I'm going to have to get the cash from someone. I have to get the cash from somebody else. So let's say I have the money in cash. After all, it's a small amount of money. So I give him the cash for my extra reserves. He goes out and buys a mobile phone, and the holder of that mobile phone sells it to him and then takes the money and deposits it back in my bank. Well, then the thing's going around in a circle, and I'm back to a point where I don't need any extra funding. But if that seller of the mobile phone has an account with somebody else, and they take the money and put that money in another bank, well, I'm short $100. That I'll have to get, that I want to get back somehow. So I may have to go to that other bank and ask them for that $100 to replace in my cash on hand the $100 I gave Mark. So you begin to see the problem. When the money is taken out of the bank, it has to be actually funded in good funds somewhere, okay? That the money, the banks don't create the money for free and keep it for free. It's free within the banking system because the $100 I give to Mark and he spends on the mobile phone, and then it winds up in my competitor bank across the street. Well, that money is actually still within the banking system, but it isn't inside my bank, and I have to get that money somehow. So now if I turn to the case, an example we were talking about this morning, where somebody from One People comes in and presents a COV, DOV, and asks me for $500 million. Well, here's the problem I have. If I give somebody $500 million, and they put it into their bank account, no problem. The only problem I have is funding my 10% requirement with the Fed. But as soon as they take the money out, then I have a problem. And even if they tell me, look, I can keep a 10% fee, 10% of $500 million is $50 million. It means there's $450 million that new customer might want to take out of my bank. When they go to take that money out of my bank, $450 million, I have a problem of where do I get that money from? That COV I cannot take to the Fed, I cannot take to another bank and turn it into cash. It's non-negotiable. It doesn't look like money. It doesn't act like money. It has to somehow be turned into something of value so I can get my hands on that money. So the bank, you might be asking the bank to lend you money against that. Well, guess what? They really don't know what it's worth. They don't know what that COV is worth. To start with, energetic value is not the same as dollars. So if you've deposited 500 million energetic value units, what are those worth in dollars? The banker doesn't know, and he doesn't know how to transform those into dollars. So I think you begin to see the problem that the banker's facing. And because of this problem, the bankers, I'm pretty sure, are going to have a big problem doing this. No one is going to find a way to give these vast sums of money out against these pieces of paper. It's not going to happen. Please read my paper. You can find more detail about that. So that's basically the problem I see. I'd like to move on to some suggestions